U.S. pending home sales surged 4% in August, far exceeding forecasts as lower mortgage rates spurred buyer activity. The National Association of Realtors reported the rebound across most regions, with contracts rising 3.8% compared to a year earlier. The improvement follows the Federal Reserve's recent interest rate cut and a drop in 30-year mortgage rates to a new 11-month low. However, economists caution that a softening labour market with job gains slowing to an average of 29,000 per month could limit further housing market gains. The U.S. Department of the Interior has announced it will open 13.1 million acres of federal land for coal leasing, marking the Trump administration's latest effort to revive the declining coal industry. The move follows executive orders signed in April aimed at increasing coal output despite global efforts to reduce carbon emissions. The initiative comes as the Energy Department expects coal plants to delay closures to meet growing electricity demand, particularly from AI. However, analysts remain skeptical about coal's long-term prospects, noting its share of U.S. electricity has fallen to 15% from 50% in 2000. New Federal Reserve Governor Stephen Moran is advocating for more aggressive interest rate cuts, arguing that the neutral interest rate is falling rapidly due to Trump administration policies. Moran, who dissented in favor of a half-point cut at the last meeting, believes current policy is too restrictive and risks harming the job market. His position places him at odds with most Fed officials, who remain cautious about inflation and prefer gradual cuts. The debate highlights emerging tensions at the central bank as the administration pushes for looser monetary policy.
I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data, my own personal analysis of the effects of economic policies upon the economy, and act based on
In a Financial Times opinion piece, the U.S. Markets Regulator Chair, Paul Atkins, endorsed President Trump's proposal to eliminate quarterly earnings reports, advocating for a minimum effective dose of regulation. The proposal would shift reporting to a semi-annual requirement, which Trump argues would reduce corporate costs and discourage short-term thinking. While some investors fear reduced transparency, the SEC appears supportive as the White House exerts greater control over the agency's agenda. If passed, the change would be the most significant shift in U.S. corporate reporting since 1970. A spokesperson for President Lee Jae-myung has confirmed that the United States has agreed not to designate South Korea as a currency manipulator. The decision removes a potential point of contention between the allies, who are engaged in delicate negotiations over U.S. tariffs and a proposed $350 billion South Korean investment. The agreement comes as Seoul seeks a currency swap to help manage the economic impact of the proposed investment. South Korean officials have warned that paying the sum up front without such safeguards could risk a 1997-style financial crisis. A government spokesperson has stated that Germany anticipates the United States will apply a 15% tariff rate to pharmaceuticals and heavy trucks. This came as President Donald Trump's announcement of much higher proposed duties last week happened. While Trump had unveiled 100% tariffs on patented drugs and 25% on heavy trucks, a White House official later indicated the administration would honor 15% caps for pharmaceuticals from countries with relevant trade agreements. The clarification offers some relief amid ongoing trade tensions between the economic partners.